Hello everyone and welcome to the ForexAnalytix next week's preview. This is Voulgaridis. I honestly hope you all had a nice weekend. Blake is off town during the weekend and I will be replacing him in making this video for you. This is actually my third time. Before we start, let me remind you that after the expiration of our new season offer, we have re-established our $1 10-day trial. And if you haven't done so already, this is your opportunity to take advantage of it and enjoy the benefits of our Tier 3 plan for a period, I think, long enough to appreciate what we can offer to you and how we can perhaps improve your trading. Now, enough with that. Let's have a look of what's worth mentioning from last week's price action. Okay, this was not a particularly volatile week, but we did see some strong moves. One of them was definitely the strong recovery that the pound posted. Also a product of some news bombs and statements, etc. You can read the details in the macro section that we have. But within a single week, in which the pound gained every single day, we went all the way back to test the 50% fib from the move lower. Now the pound does remain constructive, if you see, because we keep posting higher lows. But what happens from here is quite important. And it's also going to be in a big part a product of what the dollar is going to do. We're going to extensively have a look at the dollar in a while. Now, metals also produced some strong moves. Silver recovered quite strongly. It has actually now posted 7 consecutive days of higher move, and gold has done more or less the same. Gold is backtesting once again the $1,300 level, and despite everybody being very focused on what's going to happen from here, the reality for both metals remains that they are on occasion producing very strong moves one way or the other, but they have really failed to commit to a bullish or bearish move in the medium term. And another thing worth noticing is the rebound that the Aussie produced this week. Not so much because it was strong. Actually, Friday was the strongest day, which shows that the move higher is accelerating. To be honest, we didn't expect that. We expected, after a small correction higher, that we would probably penetrate this area and move lower. But the reason of this being an important development is the fact that if you have a look at the area that produced this rebound, is an area of importance, because it has been a zone that was capping price action since 2015, so more than 2 years actually, since summer 2015. And once we managed to break above it, also there is a way to interpret this as an inverted head and shoulders. We formed an ascending wedge. This is a weekly chart, by the way. We broke below it, we came back to retest it, and we seem to be rebounding from here. So perhaps this rebound is not a short-term rebound, but perhaps it's going to prove to be something more significant than that. An equivalent pattern on the weekly chart, and we were going to have a look at the daily chart immediately afterwards, we can find in the CAD yen. So, the CAD yen has formed a much cleaner inverted head and shoulders on the weekly chart than the Aussie has. Actually, it has been playing perfectly from a technical perspective, because It was correcting lower since 2014, since the end of 2014 in a descending channel. It broke above it, came down to retest it, formed this inverted head and shoulders, broke above the neckline, came back, is retesting it as we speak, and what's going to happen from this point on is quite significant. The only sure thing is that if we manage to hold this confluence of supports, you can see it here on the daily, you know, the big pattern is definitely in play. It remains active and it points quite higher. So, you know, these two currency pairs, I think, have some of the cleanest technical patterns out there. Okay, if I was to add something I'm monitoring that is perhaps developing an interesting pattern, is the pound Aussie, because the pound Aussie can be interpreted in two ways. One of them is, which was my main case scenario and remains, is that this is a triangle, which triangles as known are continuation formations, which would break to the direction of the short-term trend, which was higher, for another move higher, to perhaps test the 176.50 area, perhaps even higher. But we also have now the potential of a head and shoulders formation, with the neckline being the triangle support. So is this going to end up being a triangle or a head and shoulders formation? I guess we're going to find out quite soon, but for sure a break of you know, either the support or the resistance should produce a strong move higher or lower. So I think there is a potential trade here and might even get triggered within the next few days, within the upcoming week. But anyhow, the conversation drifted a little bit, because the first thing we should look at is the dollar. Obviously the most popular currency pairs and even risk in a sense is connected to the dollar, and what happens with the dollar will affect one way or another the market in a very significant way. So what's happening with the dollar here? Is it actually reversing higher, or is it about to resume the move lower to, you know, post new lows? The answer is I have no clue. I have no clue simply because although we cannot refute the strong trend lower that started at the very, very beginning of the year, we did actually finally put the seeds of a potential recovery by forming this inverted head and shoulders, this descending wedge. We broke above it. We finally managed to scale a resistance area, the 93 one. But last Friday we got rejected from the 94.20 area, which hosts these highs. So in essence, we failed to form a higher high and potentially you know, indicate that this is going to be at least a stronger recovery than what we've seen so far. On the other hand, we haven't still proven that this is not the case. I mean, we have spent most of the week correcting lower, but we have held the significant support level, and there is the potential here of actually developing a larger inverted head and shoulders formation, with this being the shoulder, this being the head, and another shoulder here. Obviously, one way or another, this week will give us some kind of an indication, and you know, if we actually accelerate lower and we lose this area of support, then the chances are going to be very, very high of a resumption lower to at least post one more low. On the other hand, if we start showing strength again and start approaching the 94.20 level, then I will be once again looking for trades that will get me long the dollar. So what is directly related to the dollar, actually what relates directly to the dollar, because the story goes kind of oppositely, it's obviously the treasuries. So if you have a look at the treasuries, last Friday, and obviously not coincidentally, the treasuries did test this channel support and proved that this channel is of importance because they reversed intraday, and more or less since we have managed to hold this area and started accelerating higher on Thursday. My main thesis for the bonds remains that this is likely a prolonged corrective pattern, and more likely than not, we are going to see this channel break and accelerate lower. If that is to be the case, because the fact that I have a feeling about something doesn't mean that I'm going to trade on it until I get some technical confirmation about it, is that until that happens, this rebound might extend even higher. I mean, it might test the 38.2, it might test the 50% fib, it might even go all the way to 127, test the 61.8. So I'm going to be watching the bonds and search actively for a reversal candle or a reversal confluence to time, the dollar's reversal. Let's have a look at the yen as well. Okay, the USD yen, which is obviously directly correlated with both the bonds, especially the bonds actually and the dollar, has had a strong move higher, but then we started seeing signs of momentum loss, an ascending wedge, and this ascending wedge is breaking lower. So far, the momentum has not been persuasive enough for us to, turn outright bearish. And I would say that perhaps 110.90 is a good area of support. So, I wouldn't commit to the downside, but definitely this is something to monitor, especially if, and this is a big if, we see some kind of a pullback or some kind in the stock indices or some kind of risk aversion coming in the market. So far, the stocks more or less globally, more profound in the US indices, have been completely numb to any kind of news. They seem completely decoupled from any kind of news. I mean, either they're from a macro perspective or geopolitical events, political risks. They just don't care. The SPX, for example, as you see it here, it keeps drifting slowly higher. We almost went nowhere this week, but we're still drifting higher. The DAX has been doing the same. They're both in all-time high territory. The Nasdaq has been doing the same. The Dow Jones have been doing the same, but the vast majority of them are approaching some critical resistance areas. And I strongly believe that it's a matter of days for us to see some kind of a pullback. I'm not talking, about a 180 degrees turn in the risk-off environment, but we can get some decent pullbacks without even affecting the longer-term bull trends. I mean, for example, the SPX, it can go all the way down to 2,510, which is like almost 50 handles lower, and there's absolutely no harm going to be done to the bull trend, even down to 2,485. So if we see some kind of a reversal, which I think it's quite close, and even if it lasts for a few days, that might give enough of a push to the USD yen to also show some follow through lower. Okay, the Euro USD, I know it's very popular. It broke above this descending wedge. obviously this was a bullish development, but on the other hand, it has failed to break above this critical area, which is at 118.50 to 118.70. It was also the neckline of this head and shoulders formation. So, you know, this, as the DXY has done, inversely of course, also shows that the market does not want to commit to more dollar weakness yet. So, you know, to recap, this is a week that's very likely to give us some good guidance of what's going to happen with the US dollar and what's going to happen with risk. And I think before we jump into, you know, any trades, it's a good idea in this kind of a choppy environment to stay nimble, wait for confirmation, because I think some good trading opportunities are around the corner. And, you know, for you that follow us in Face, if you haven't done so already, by the way, make sure you go register. You can find the registration button here. It's for free. It's our daily webinar hosted by Dale Pinkert. For you that follow us there, and especially for our subscribers that follow us every day with our updates in our chat room, etc. You know, we will be going through the markets together day by day, and we will be there to take advantage of whatever opportunity comes up. So thank you very, very much for watching this video. If you like it, please subscribe to our YouTube channel so you can receive notifications for whenever we post something up. Give it a like as well, a thumbs up, and we'll see you next week. Actually, Blake will see you next week. Thank you very much.